The concern here seems to be, and it chimes with your notes, which is you're concerned about the validity of the recovery because of the counter-cyclical methods they use to bolster these numbers.
Absolutely. You know, I'm surprised it wasn't even a stronger number that we saw today. The fact that it came in as expected, when we know that there's been a lot of state support over the last quarter to bump up growth, and we know that there's been an 18% year-on-year increase in aggregate financing. A flat outturn is pretty disappointing in the scheme of things. What that tells us is that the credit intensity of growth in China is still very high and is still rising. It takes as much as 6 renminbi now to drive 1 renminbi worth of growth, and that's certainly not a very sustainable situation at all. If you look at trends, while the state support has been escalating, state fixed asset investment, it has increased from about 10% year on year up to about 25% year on year, year to date. Private investment, however, has slumped from about 10% year on year to about just under 3%. Very disappointing.
So you're disappointed in the numbers that they've managed to achieve, but are they good enough, stable enough, that the PBOC, the government, is able to take some action to try and tackle the bubbles that were referred to by Tom earlier on?
I think, you know, the GDP worship still remains, and as you say, that we are on track to hit the annual GDP target for this year, which allegedly gives them focus to, you know, to turn their focus towards the bigger structural issues. But I guess the problem really is that the political will there to push that. All this talk about reducing the state's dominance is, you know, we've seen quite the contrary in the last few years.
Sue, stay with us. Let's bring Alan Higgins from Coutts into the conversation. Listening to Tom, listening to Sue, something that Anna and I looked at this morning is, well, what is the backdrop? And what we've got for you is BTV 4394. This is the Bloomberg Monetary Conditions Index. It's a weighted average. There's 100. You can just see it was sort of in expansionary mode as the yuan has drifted lower. It's just coming off the boil, though. I mean, where are we in terms of policy mix in China?
Well, as we hear, they'd like to cut rates, but they can't because the housing market is actually booming. And going back a bit, a lot of houses, a lot of property, apartments, houses in China were bought for cash or very low mortgages. They're moving more to a Western model, quite high, basically loan to value, loan to equity values. And so there's some concerns that they really can't. So, yes, we've had weakness in the currency, that helps, but it's mainly against the dollar. The weakness is not widespread. So I would say they're fairly satisfactory figures. Also, one thing that wasn't mentioned, retail sales. We want a consumption-driven economy in China.
Up over 10%.
Yeah,
I mean,
that's still going strong. That's what I looked at first thing this morning to make sure that was still on track. But,
so in terms of the new China story, Alan, you see reasons to be a bit more cheerful than in some of this latest data? That reorientation away from heavy industry and towards retail and the consumer is working?
It's difficult. I think it's difficult. It's a very murky picture. And we always say in terms of China, it's best not to be a hedgehog. Hedgehog versus foxes. Hedgehogs make these grand statements on China. China's going to collapse, or China's wonderful. That's very, very dangerous because it's very hard to understand.
Sue, let's bring you in there. Be a hedgehog, not a fox. So I just want to know which one you're going to choose in terms of your currency call. You actually say that they've engineered this stability in the yuan in the run-up to the accession to the special drawing rights. You're not as convinced that this yuan stability will deliver going forward. Where do you see the yuan and in what time frame?
Well, my forecast for dollar China is 6.95 at the end of this year, 7.5 at some stage in 2017. The stability that China engineered throughout August and September was very successful. They kept a lid on dollar China at 6.7. Since China has returned from the National Week or Golden Week at the start of October, we have seen this slow drift up in dollar China up through that 6.7 level. Yes, it hasn't made new lows on a basket basis, but the key there is dollar China is on the move, and that's a big component of the basket overall. And we see that trend continuing.
Sue, we saw the Chinese... We saw the Chinese authorities selling treasuries to prop up the currency. That's been a long-running story, of course. Is that something you look to continue into the future? Then is this something that gains pace and momentum?
I think the fact that we saw a big sell down in treasuries from China over the month of September does reflect intervention, but it also reflects China's long-held ambition to diversify its reserves away from dollar dominance, and that's a part of the story as well. So I'd expect that to continue.